Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 30th of September, 2025. This is episode number 2693 of the TraderBite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Yes, I know it's Tuesday. Why are we doing a TraderBite? Well, I'm traveling today. I'm up here in Canada and I will not be available tomorrow morning. So instead of doing one tomorrow morning, I'm doing it today. I try to stick to a Monday, Wednesday, Friday schedule, but life gets in the way. Little kids and business travel, family travel, all that stuff gets in the way. All right, so let's just jump right into it and talk about the convergent trading pre-market summary sheet here. Overall, we are basically one rotation away from being unchanged. Uh, so the overnight risk exposure really is mixed at the current moment. It is leaning just tad bit slightly to the risk off side. In terms of earnings, nothing really significant. Paychecks pre-open, and then after the close, Nike. The general themes that we're looking at today, the Chinese MBS manufacturing PMI came in higher than expected. The Reserve Bank of Australia kept rates on hold as expected. German retail sales lower than expected. US GDP year on year higher than expected. French and Italian inflation lower than expected. German inflation higher. U.S. government shutdown appears likely to happen tonight from midnight. So there was a meeting between the Senate Minority Leader and several others from Congress with President Trump yesterday, and there were large differences, so there was no deal. Votes going through the Senate today, but it's very likely that it will fail, which means that the government will be funded until midnight tonight, and after that, it is running on thin air. So as a result, the big number this Friday, the non-farm payrolls, is very likely to be delayed, maybe put off. Remember, Friday at 8:30 Eastern, we're supposed to get the non-farm payroll release and the unemployment number, and that's a federal product, and it's likely to interfere with all federal economic releases going forward. So, not fun at all. Um, the government can remain shut down for about 2 weeks before folks start to get really nervous about their jobs and their bills. This is basically politics playing with people's paychecks. Generally, not a good thing. So, every administration, by the way, has done this clown show where we fight to fund the government with more debt. And then, if it's the Republicans in the executive, then the Democrats don't want to fund it and claiming that, there have been cuts, like here, there have been cuts to healthcare, Medicare, and so on that they want restored. And if it's the Democrats in the government, in the executive, then it's the Republicans saying that we're spending too much and the deficit's out of control. So it's just, again, it's politics. So Trump also said that they're imposing 100% tariff on non-U.S. produced movies. There was an immediate response on Netflix, dropping any movie that is produced outside of the U.S. is going to have a 100% tariff. He also imposed a 10% tariff on softwood timber and lumber imports effective October 14th. OPEC announced this morning, if you're looking at crude, we had a nice big flush down. OPEC announced that it's going to increase its production by 500,000 barrels per day for the next 3 months. We saw crude drop on that. We'll talk about that in a bit. I'm not going to go through all of these releases. Everybody's got access to a calendar. It's not time well spent. I'm going to point out, though, that the U.S. JOLTS job openings is important this morning at 10 Eastern, 9 Central. So Pay attention to that. And then of course Chicago's PMI, but that comes out to subscribers. It's a private number, comes out to subscribers at 941, 942, and then to the public at 945. But it has not really moved this much lately. Used to be quite a significant release. Really, just pay attention to the JOLTS openings at 10 Eastern. Looking at the heat map this morning, you could see crude way off on that. It was already sagging, but it's even further off on the OPEC Plus news. We're also seeing quite some range in gold and in silver today. You could see the relative range is 200%, 179 respectively, and a lot of volume. So if you're trading those products, we're likely to see quite a bit of movement. Gold has been on a tear, reached as high as 38.99, almost $3,900 an ounce on the GC contract. Just massive. As soon as it tagged that, it put in a weak high, a double TPO high, and has dropped back to 38.20. Is currently trading at 38.43. So quite a bit of range there, big breakout to the upside, and an immediate response to the downside for a pretty active day so far. The S&P multi-distribution profile this morning, we have an upper distribution that broke down, and we formed a lower distribution. We have attempted to cross back up. We'll look at that in more detail in a bit. But overall, we had a multi-distribution profile yesterday. We had basically a normal variation day, what's called a normal variation day yesterday. Yesterday was kind of interesting. Again, we'll talk about that in a bit. But the overnight session shows that there's a little bit of separation between the overnight point of control, which is very likely to shift here soon, the full session VWAP, full session mid, and current price. So we're trading right on top of full session VWAP, full session mid in the S&P on the overnight session. We're close to it in the NASDAQ. And we're holding at 124,000 contracts traded so far, which is, it's in line. Inventory's 91% short, meaning 91% of the volume occurred below yesterday's close, and the range is 22.75, well within what we would call normal. Let's look at the charts. Let me start with this. Let's enlarge. This is from yesterday's TraderBite. This is yesterday's video. You have access to it, of course. Let me see. I think there's a better scene for this. No, there's no better scene. Actually, let's... yeah. So, looking at yesterday, we had a very clear, very coordinated channel on the rally side yesterday, a trend type profile that stalled out at 37, 36, 37, 36 even, and by the time the TraderBite was being done, we had pulled back and it looked like we were making a run for the high. At that point of the TraderBite, it looked like we were looking for a continuation trade higher, the primary scenario being that we are likely to push through into the 6750. I'm looking for it to kind of take out the 42 to 44 zone from the session of the all-time high, and then make an attempt at the 6750-ish area where we have a high volume node, and then fall back off. The secondary scenario is we're likely to take out the overnight high, for the overnight stat, and then we're very likely to find some sellers to push down to the 6704 area, 6700, 6704. Those are, you could see that in the caption there. It says if we clear 6720 and then we start to make our way back to 6700 to 6704. Here's what actually happened yesterday. Well, let's look at it here. So you could see what was really interesting yesterday is that we had this run up in the overnight session. We pulled back and we were basically right here during the trader bite. And what we did is we missed the overnight high by a tick on a retest. So this sets up a setup for us, a spike retest fail setup for entry. And that happened right before the open, right? So let's bring that in a little bit. That happened right before the open. We opened right here, somewhere in here, and the open had a very clear opening swing high and low. It tested down, and sorry about these bubbles. Let's get rid of these bubbles here. These are just trade indicators. Um, we had a push down, back up. We had a weak high, and the expectation is it's very likely to push through and squeeze to that overnight high for continuation play, and it just sat sideways. I mean, it was very, very choppy throughout, and then once it broke the IB, it came back. The formation of the IB low was pretty good. It broke the IB, pulled back, pulled right back, and then it just continued lower, gave you another chance with an IB retest. The IB retest was backed up with the earlier structure right here. So this would have been your stop backup right here. Okay, so you would have had to stop above the day generated prices, and then finally it releases to the downside, pokes into the prior. So we had a gap, so it poked into the prior day, prior day's high, poked into the range, pulled right back, and then continued before stabilizing. And since then, what it did is it opened in a zipper, very, very quiet, waited till the European Open, which was right here, and then we get this drop. And so we end up with two boxes for the session, a box here and a box here. Basically two balance zones and a double distribution profile. As you can see, there's a double distribution profile right there with an LVM between. So guess what? The space in between becomes the 6706 to 6707 becomes the LIS, or the line in the sand. Becomes the line in the sand, and the market is just kind of splish splashing across it right now, trading across both sides. So it's very indecisive at the moment what it wants to do. So let's go back to the bigger picture. Here's what we formed yesterday in the market profile. We closed up a couple of single print zones. We didn't leave a gap. We left a bit of an excess low right down here before we rallied and settled into the close at 67.13. We're currently trading at 06. And we formed these two distributions in the overnight session that look kind of like this. So we are opening in a very, I would say, undecided or precarious location. Um, Very undecided and precarious location so far. And so when we look and we include the overnight session, which I focus a lot on RTH, but we always include the overnight session because it describes what the most recent auction is. You can see the point of control is up here, and then the point of control is very likely to shift down, bringing the lower box, DGPs, and the price action into the lower distribution. So this, to me, this looks weak. It looks weak. So the primary scenario for this is likely to be, unless things shift dramatically, we did poke and hold above and close above yesterday's range. And so we're one time framing up. But currently, what this looks like to me is it's likely to try to retest lower, find support in that green band in the 6702 stock zone above the 6700 where we tested yesterday. And I'm expecting it to go to the other side and resume what it was doing yesterday and start to move back up into the 67.25, 67.30 zone. That's the primary scenario. Yes, that sounds counterintuitive, but remember, one time framing up, we have an excess low. We continue to one time frame up. We move the point of control higher. Price action is higher, so the market imbalance day to day is to the buy side. And so any opportunity for buyers to step in at lower prices is likely to be taken. It has tested but not really breached the 6700 zone. It's holding above here. They're doing a good job defending this price. So unless we spill on the open and drop right away, I'm expecting buyers to ultimately squeeze out and exhaust the sellers, and therefore I'm expecting it to push back up into the 67.30 area. Does that thesis make any sense to you? Um, this is the primary expectation. Secondary, we open, cross the line, we're unable to continue. Buyers are not able to step back in. We drop back through the LIS, which again is right here. We drop back through the LIS, giving us an opportunity for some weak buying to sell into, and then it clears yesterday's LOD, yesterday's low of the day, which ends the one-time framing, which is likely to accelerate us down to the next key area below, which is 6680, before we see a bounce. So you could see there's, a low volume node here, right there, and that becomes the next key area. Now, listen, it can continue, it can drop to 66.55, it can do whatever. I don't really care. I don't really care. What I care about is that my targets are balanced with my risks, because I'm looking for an R factor of 1.83 or better on every trade at a minimum. At a minimum. So, having a pullback that provides a risk of, say, 46 points for a run that gives us somewhere around 30 points, that gives me the R factor and it keeps us in business, right? So we have to balance risk with reward here. Risk is always ever present and unknown or unquantifiable in terms of when it shows up. So those are the two primary scenarios there. I know I'm using the same colors. I used to use green and purple but I'm just done screwing around with the software, changing colors and stuff. So that's the S&P. Please don't forget to monitor the bigger picture. Like, what are we doing? Look at this. From the all-time swing high to the most recent swing low, we're basically at the 50%, right? So it's not like we've done anything significant here. See, we're still holding, we've broken through the 50% to the upside, and we're basically holding in this kind of 50%-ish zone in here. So to me, this thing has a life in it still to the upside. There's nothing here that tells me that we are done pushing all-time highs. So try, the goal for you as a trader to avoid getting entrapped in this scenario where you're looking so tightly at the screen that you're missing the bigger point. For crude, this is what I posted in. I'll just show you this. I don't know if the folks at Convergent will like this or not, but I'm going to show you it. This is the Convergent Discord channel. And yesterday, what I said about crude is, look, we have basically formed this kind of tweezer top type of thing, a head and shoulders formation, and the expectation is that it would push, it's very likely to push into the 62.97 to 63, and I outlined that here in the homework. CL push to test 66 handle and fail completely to hold. Basically a classic head and shoulders selling run, with 64.05-ish being a key defense area for buyers. If it gives up that area, so if it gives up to 64.05, then we are looking for it to head back. It's very likely to head back to 62.95, 63, and that's exactly what it did. So this is yesterday. Yesterday's close right here, the low is 62.98. So it's exactly what it did. It fought the 64.06. See this band, this red band here. It fought this band in the overnight session, bounced back up almost to VWAP, and then fell right back through and managed to get that 62.95 area before settling at 63.45. What's crude done since then? It has basically done nothing in the Asian and most of the European session until it dropped right here, and then we get the OPEC official news. So somebody kind of knows what's going on here. We get the OPEC official news right there, and it just squeezes right into the 62 handle. So we've gone from this high of almost 66.50 to 62 in 2 days. 2 days, lots and lots of structure and opportunity in crude. Of course, there's always risk when you're trading a product like this. And of course, don't trade the large contract, trade the MCL instead, the 1/10 size contract. And now we've opened, crude has opened right there. The open is at the low end of the range, and what this is it's responsive, but it's got quite a bit of overhead in crude. So I'm expecting crude to make its way back. It's covered a lot of territory in a very short period of time. I'm expecting crude to recover and really to hold near that 63 to 63.30 area today. We'll see how that goes. I'm not anticipating that crude, the news is out, so I'm not anticipating crude to sell a lot further than it already did this morning. The news has already baked in, and now we're just left with buyers as the sellers are already in the game, in my opinion. So that pit session has started, and just keep an eye on this important band up here between 63 even and 63.25. That's the kind of key defense area and the low area of yesterday's trade. Once it kicks back through that, then very quickly it moves into the next stock zone, collision zone, 63.50, and then the shorts have an opportunity to squeeze it back up to 64.05 from yesterday, and so on and so forth. But in general, I'm expecting it to come up here and just hold steady. We'll see what happens, and check in on crude tomorrow morning and see if this is what actually played out. Now, there's criticism that, yeah, this is all hindsight. You're just talking about the past. That's easy. What nonsense. But unless you're expecting to be taught how to trade in a 20-minute video, which is just highly unrealistic. My goal here is not to teach you how to trade. My goal is to teach you how to think about the auction and how to think about a robust way to look at the market, so that you can develop your actual trading plan. This is why I'm not sitting here going, yep, my entry is this price, my stop is this, because it all depends on what the auction is doing at that moment. I'm identifying risk in the process. I don't have an approach that presets the trades before the open so I can just show you my trade sheet. That's not the way I trade. Maybe others can do that, but that's not the way I trade. But understanding the narrative keeps me on the right side. It's a lot like having a cheat sheet on how to have a relationship with your spouse. How well would that cheat sheet work in your first argument? But understanding relationships, human needs, Maslow's hierarchy of needs, and the importance of stability and security in a relationship, whatever challenge life throws at you as an individual and as a couple, can be handled by following the true nature of how human beings interact and what's important in a relationship. And if that's your basis, then you don't have to worry about the next disagreement, pain, hardship, challenge, sickness, disease, whatever may come. You're able to understand holistically how the thing works, what your capacity is to manage, and you can take on any type of market, whether it's a whether it's a monetary policy regime, whether it's a volatility regime, whether it's a bullish regime, a selling regime. It doesn't matter. I can still adjust, and it's just a function of adjusting my entries, keeping a risk factor that makes sense, and then just taking the trades. And my edge is likely to show up over time. So the idea that trading is mathematized and it's something that you can throw into ChatGPT and you get these prices, good luck with that. Because the entire game of trading is based in probabilities, and we talk about probabilities all the time. It's all probabilistic. Nothing can and will be known. Just remember that. Good luck, and I'll catch you on Friday at the next video. Cheers.